Hello and welcome to this next edition of Market Wrap. As usual, we have our research head, Mr. Pankaj Pandey, with us. Good evening, sir. How are you?
Hi, good evening, Gaurav.
Yeah. So, sir, doing a early market wrap because we have holidays on Friday. So, let's start with Nifty only. So, what is your take of Nifty? Because after hitting a all-time high, we saw Nifty coming down towards 22,200-ish level. So, broader way going into next 15 days, what is the level that comes into your mind?
So, Gaurav, good part is that the Nifty has been sort of consolidating at higher levels, and our sense is that overall 22,700, the levels what we have sort of put for March, I think is very much on the cards. But volatility can obviously sort of pull the market down. So probably supports could be at 21,800 kind of a levels. But I think with banks doing relatively better, I think the stage is all set for 22,007 to be achieved. However, something similar cannot be said about mid caps and small caps.
Exactly. Like on Wednesday, if you see mid cap went down by almost 2%, small cap index was down by 3%. So broader market we saw selling and Bank Nifty was the outperformer. And since last Friday, we are seeing 1,000 point move in Bank Nifty. Like that is the day when it started and we took Nifty along with it about more than 300 points. So उसने पूरा एक tone set कर दिया है. So 21,800 and 22,700. This would be a broader range for Nifty going ahead. That would be perfect. Sir, any sectors or something apart from banking that looks good to you?
So I think there are a couple of sectors which have not done much in terms of price performance. So IT is one sector which can deliver low double digit kind of a return because if the expectation of rate cut in the US goes up, then it obviously tends to benefit the entire BFSI as a space, and banking and financial services there in US is one of the biggest IT spenders. So obviously it improves the outlook for IT. So IT can be a beneficiary. Now, China has come up with a 5% GDP
Yeah.
outlook. I hope that they sort of deliver this 5% GDP so that they don't have to dump chemicals or steel in our
Yeah.
sort of country. And that might sort of lead to better days for metals as a
Metals.
pack. And I think energy and pharma sort of continue to do well. They have been relatively doing well. So I think these are the four sectors which are looking okay to us.
Right. I think even dollar index was softening, so that is also a good sign for metals. So let's see if good things are coming in. So good thing is coming in one more asset class. मतलब I know you will आपको अच्छा ही लगेगा. I know you don't track it as well. इतना there are cryptocurrencies. Bitcoin hit its new lifetime high. So just another talking about another asset classes because we do not cover it as an organization. This is just a banter, nothing else, viewers. Moving on from here, there was an important news which came on Tuesday regarding Bloomberg's bond market or something. I wanted inclusion of Indian emerging markets in Bloomberg's index. So, what is your take on this news?
So before I come to that, I think mid caps and small caps deserve a small mention. So I think one should notice that since October last year, this segment has done very well.
Yeah.
So they have rallied about 35%. And we've seen that with this kind of a rally, you can get a 12 to 15% kind of a correction. At this point in time, we have done about 8% kind of a correction, or probably slightly higher.
Hmm.
Overall, sense is that one, I think some of these pockets were sort of overbought. Plus, with the kind of rally what one had seen, I think some bit of a profit taking should not worry about the entire outlook for mid caps and small caps. So I think structurally they continue to be good. It is just that they've rallied and we are witnessing profit taking there. Now coming to bonds, I think see there were three expectations. One was the JP Morgan Global Bond Index, which is where the inclusion will happen for in the second half, and that is where the inflow is expected to the tune of about $25 billion. Then you have Bloomberg Emerging Market Index, which is what has come into the news, where the overall expectation is that they'll start adding India next year onwards, starting from January. So that could lead to an inflow of about $2 to $4 billion. And then you have Bloomberg Global Aggregate Index, which is still pending. So that could add another 15 to $20 billion kind of index. Now, inflows. So good part is that we are seeing some benefits of this in yields. I think when the JP Morgan announced since September last year, we have seen inflows to the tune of about 80,000 odd crores. The yields have also softened from say 7.38 to closer to 7.05. So any long duration fund like HDFC is giving about 6% kind of a return, and our sense is that with the kind of setup what we are seeing in the US, 50 to 75 bips rate cut is what one should at least pan out. And I think RBI also has a similar headroom to sort of cut rates. So overall sense is that see, in the beginning of the year we had come out with a note also that the long duration funds can deliver double digit return largely because of the decline in yields. So I think things are progressing well on that front. We have already got 6%, and with 50 to 75 bips possible decline in yields, I think we could see double digit gains in some of these bond funds. So I think this news continues to be good, and I think if it sort of pans out in the second half, I think it will be very good for the BFSI as a pack, because that is one sector or segment which needs to perform for Nifty to sort of become a lot more sustainable.
And I think that would be crucial, because Bank Nifty would be the one which will take us to 24, 25 level, which what we are expecting by end of
Absolutely,
2023.
absolutely,
Okay. That's it. I think that's a good news, sir. I think, and it also gets the FPI inflows as well in the market. So once that
absolutely.
inflow comes in, the market has to move up. So it's a good news in all, like in from every part of for the market. Moving on, sir. Next we had the auto numbers. Auto numbers, and we had one more good. I won't say good. I think one more news around your favorite stock, that is Tata Motors. So we'll talk about both the news together. So auto numbers, what is your take, and also on the demerger news which came in for Tata Motors?
So for the month of Feb, the auto numbers were quite healthy. So we have seen 20% kind of a growth in two-wheelers. Four-wheelers, about 15% growth. We had a single-digit decline or low single-digit decline in what do you call CV, and double-digit decline in tractors. Now, good part for two-wheelers is that see, export as a leg has been sort of missing for some of these companies, but that is sort of getting revived. So which is why we are seeing good growth for all the players, be it Hero MotoCorp or even Bajaj or even TVS. I think TVS continues to be a sort of an outlier with about 34% kind of a volume growth. I think iShares was slightly muted because they delivered 6% growth. The only solace was the product mix is getting better. Maruti also came out with a decent set of numbers, 15% kind of a volume growth. So I think two-wheelers and four-wheelers did well. I think on the CV side, the buses as a segment continues to do well, but somewhere down the line, the truck as a segment continues to remain soft. And I think tractor is largely sort of witnessing a decline because of a higher base. Otherwise, nothing negative in tractor as a whole base. So overall, good set of numbers from the auto perspective. Now, coming to Tata Motors, I think they've announced a demerger of their PV and CV business. Now, both businesses are sort of different. So, for example, CV is more of a cyclical business, whereas PV is more sort of a stable growth business. Now, our perspective is that in the CV business, because government has put, or government is putting a lot of effort in sort of on changing the ICE composition of buses from, say, ICE to EVs. So a lot of opportunities expected to emerge there, and somewhere down the line, I think that would require some bit of funding there. So it makes sense to sort of separate that subsidiary. Otherwise, overall on the PV side, things have been good. I think what can change in the PV businesses, we used to sort of value Tata Motors at 10 times EV by EBITDA. I think they can command probably similar multiples of say 12 times EV by EBITDA, which is what we give to Maruti, given the fact that though Tata Motors is not as big as Maruti, but on the EV side, they're a fairly large player. So I think that is what could change in the near term. So our target prices have also sort of got revised to about 1,085. I think a lot will depend on how things sort of shape up, especially on the CV side, what kind of effort company takes to sort of ramp up the EV side, because that is one thing which can positively surprise the market going forward, given the fact that government is focusing a lot of effort there. So I think good news, but not that I would expect a stock to sort of do very well in a short term, but I think potentials are definitely there for this stock to keep outperforming.
Okay. So, sir, like I know we do not look at other brokerage houses, but there are a lot of brokerage houses which have downgraded the target price. They lowered the target price for Tata Motors. So are we on the same page, or we still to review it and come out with a report?
So we've revised our target prices a bit 2085.
Okay, so that is almost at the current levels where it is. Okay, got it.
So post announcement it has rallied. So I think which is why it is hold now.
Exactly. Okay, got it. Moving on, sir, from autos to coal base. I think there is good current and good traction coming on the side of coal based power plants. So, what is your take here, and any particular company in your radar?
So I think on the coal side, if you look at the demand continues to remain healthy. So we are going to see 6-7% kind of a power demand growth. Next 5 years, the expectation is about 8% kind of a growth. Overall, the expectation is that we should be adding about 80,000 megawatt kind of a capacity on the thermal power side. And the key player again is NTPC because they've already sort of they will order about 10,000 megawatt kind of a capacity equipment order. They will come out soon, and they are already in the process of executing or implementing or putting up 11,000 megawatt kind of a power capacity. Then I think good part is that a lot of the private players like Tata Power or Adani, so they are looking to sort of either acquire existing plants which have got approvals or setting up new plants. And I think another beneficiary is obviously BHEL because BHEL in the last 6 months has won orders to the tune of about 30,000 odd crores, so about 4,800 kind of a megawatt. So the best player, according to us, is only NTPC. I think we still don't know BHEL whether they are sort of undercutting in terms of margins. But I think NTPC looks to be a clear sort of a beneficiary there with relative valuation being a lot better.
Okay, so NTPC, I think we have our coverage here, and I think you're continuing to be there.
Correct.
Uh,
Our target price is 400 on the stock.
okay, got it. So next news is a merger news. I like everybody knows, and I think you आप weekend में बाहर थे सर क्या? आप भी जामनगर गए थे wedding bash के लिए, pre wedding के लिए?
No, actually not. I had to go to Dubai for customer engagements.
I
I
think you're
think
lying.
so. India's story is not only liked in India, but it's being liked overseas as well by a lot of NRIs.
Okay, I'm pretty sure via Jamnagar ऐसा कुछ हुआ होगा. Okay, jokes apart, sir.
I
So
wish.
what is so what is your take on this merger news? I think it is somewhere around 11,500 crore deal which has come up. So what is your take?
So I think, see, good part is that see this is going to create a media behemoth. So obviously, and the best way to sort of play that would be Reliance Industries because while the company is valued at about 70,000 odd crores, Reliance is going to inject about 11,500 odd crores. One common misconception is that TV18 could be the driver or so I think actually for them, their contribution is only 4,500 crore of the entire value. So Reliance Industry is one of the best ways to sort of play this entity. Now, overall, this entity is okay in terms of valuation. So it's about 2.8 times sales of 25,000 odd crores. But our sense is that their ability to sort of scale up going forward will be a lot more higher, and that will be the most important thing to sort of watch out for because I think they will have about overall, I think 40% of the viewers' market share and about 35% of, 35% of the viewers' market share and ad market share of 40%. And obviously, with that kind of a muscle, they can sort of pull up even more better set of numbers. So, which is where I think Reliance is the entity to sort of play that, not the TV18. So, I think overall, they've got a good deal with the Disney being valued significantly lower than it was valued earlier.
I think, sir, it takes away a lot of rights because cricket goes to cricket is with them. I think Premier League was one thing which was highly seen on Disney Hotstar. I think that also goes with Viacom 18 now. So apart from something being on Sony or something, I think this will be a big media juggernaut to be honest.
Absolutely.
Yes. Okay. So moving on. From Reliance ka news to your favorite sector, there's no guesses here. People will also ask, understand that is the defense sector. You always say हम try करते हैं कितना भी करने के लिए, एक हफ्ते में एक न्यूज डिफेंस की तरफ से आ ही जाती है. तो सर वापस से कुछ अपडेट्स आए हैं. We've got some updates on the defense sector. What is your take on the recent developments?
So just to put things into context, our overall defense spending is about 6 lakh crores and our capital expenditure is somewhere about 1.6, 1.7 lakh crores. And last 2 years, you can understand the size. The government has given acceptance of necessity to projects worth 6.25 lakh crores. And which is why this is one sector where you don't see much of a price correction sort of happening. And now recent announcement is again for about 39,000 crore worth of kind of a project. Largely, a bigger chunk is 20,000 odd crore for BrahMos missile, which again is good for companies like Midhani, Astra Microwave, or Data Patterns. And I think there is a bit of a deal for HAL worth 5,250 crores for the MiG-29 engines. So overall, I think defense, like I've been saying, continues to sort of do well. The bigger picture keeps getting bigger, and I'll not be surprised if exports turn in a big way. Then I think we are still sort of scratching the surface from that perspective. But nevertheless, we continue to like this space. Beneficiaries again, one could be BDL. So BDL is something which where we feel that 30% kind of a top line growth and 47% kind of a bottom line growth can come by. So and that is one of the picks. Besides that, we also like Astra Microwave and Midhani. So I think these are the three names. HL continues to do well, so no major surprises there.
I think we have covered all the defense sector ka package. And I think
Yes.
that if I'm not wrong, there is one news which is coming up that after that Maldives ka thing, Lakshadweep will be the new naval base. So they'll also start spending on that side as well. So probably Cochin shipyard के लिए भी एक अच्छा सा news आ सकता है वहाँ पे going ahead. Okay, sir, moving ahead from here, I think news में तीन चीजें थी. Paytm हुआ. Paytm के बाद we had IIFL and we have recent JM Financial News, like some orders from the RBI. So these companies are facing the heat. So NBFCs, to be honest, are facing the heat. So the recent developments in this space.
So I think overall, with the kind of price damage you see to some of these stocks, that's quite enormous. Because especially the NBFC space, RBI has been highlighting some of the regulatory concerns. So I think the recent concerns have been IFL Finance. Now we don't cover the company, but broadly our sense is that 1/3 of their book is gold loan, and concerns or the concerns highlighted is that there is a breach in LTV. Then they have been giving higher than permitted or doing higher than permitted cash transactions. And then there is a challenge on the deviation in the purity of gold. So basically, gold is valued higher to sort of give higher loans. And the thing is that, see, gold loan as a book yields about 90% so which is a high yielding book. So obviously, it has implications. So, for example, if hypothetically if the gold does not grow, or it sort of comes down by half, then the growth for FY25, I think, could be flat for this company. And whenever the growth becomes flat, then usually the multiples what you give in terms of, say, 2.5 times kind of a book or 2 times book, I think gets shaved off. And which is what is going on with this company. But I think JM Financial is also a similar kind of a case, but a different kind of a problem. So that is where also the regulator has highlighted that they've been taking very less margins for financing of debentures or IPOs. So that also, I think, is facing regulatory scrutiny. I think till the time this does not get over, I think one should not do bottom fishing. I mean, I would want to highlight that so we had the issue with, say, Bank of Baroda. The RBI sort of stopped them from digital onboarding of customers. And that issue is still sort of not resolved. So it could take time. So before one's patience sort of runs out. So which is why I think till the time regulatory clarity does not emerge, one should not really do the bottom fishing.
Absolutely. Sir, just one thing that it's a negative thing, negative news for one like IFL Finance to be precise. But since this news came out, IFL stock went down by 20%. But two stocks, Manappuram and Muthoot, were doing well because even they have a considerably good gold portfolio. So this bad news can turn out to be a good news for these two companies particularly, or there's no like connection between them.
Well, it can. So, not saying that it cannot be a good news for them because typically our sense is that most of these players operate uh, in a nearby vicinity. So you will see branches of some of these players
Yes.
nearby. And obviously, there is a requirement for loans, so it does help the competitors. But whether post IFL you will see any other company name coming up, I think that we have to see. So,
Okay.
which is where the challenge lies. But yes, it could have a posture above on others.
Absolutely. Okay. So, sir, I think I have one more on the new hospitality. I think both go hand in hand, but this hospital sector has come under Supreme Court's radar now. I think they have got some diktat of reducing the prices and all those stuff. So what is your take on this news?
The good part is that most of your hospitals have fallen by 10 to 20 odd percent. And I think, see, some of the hospitals have been already sort of operating a portion of their business at CGHS rates, which is 40 to 60% cheaper than the market rates. The challenge is that, see, the reimbursement for these usually comes with a lag of 3 to 9 months, and which is why hospitals tend to sort of avoid doing business there. But our overall sense is that so while this could be a minor hiccup, but I think the correction is a sort of a welcome correction. And overall, our sense is that it has also sort of correcting the valuations because historically, most of the hospitals, the average valuations have been about 18 times EV by EBITDA. It had gone up to 23 times, so some bit of a correction is a welcome correction. Nothing takes away the long-term lucrativeness of the
Yeah.
sector in terms of higher medical tourism
ARPOB.
sort of helping the sector. Then on top of it, you have the overall insurance cover is going
Oh,
to sort of go up. And then these companies are expanding their capacity by 35%.
yeah.
So even if they were to sort of offer some of their capacities at a subsidized or at a CGHS rate, I think it does not materially impact the direction of the or the trajectory of the sector, although there are some pauses in it, and which is what we are seeing at this point in time.
Absolutely. And I think, sir, I was reading a report, the ARPOB for these hospitals, I think last financial year was somewhere around 45,000 per day. It has come up to 52, 55 in that range 52 to 55. So even if the testing and all those stuff can go down, these guys can hike the room rates and all those stuff. So they can balance it some way or the other, not particularly in the tests and all. I think that can be taken care
Correct.
of
So,
probably.
so for example, historically, we have seen capping of knee implants, and that hasn't really impacted
Yeah.
the numbers for most of the hospitals. And I think ARPOBs going up by 10% is a very secular trend we have seen across all the players.
Exactly. I think
Last,
RPOP is the one, like 10-11% is the one for major hospitals is coming up.
yes.
Yes. So, sir, that is what I had to cover in today's market wrap. So, as usual, we won't let you go before you share your hidden gem. So, which sector and which company is it?
So I think luxury segment is something which is drawing a lot of attention.
Dubai,
Be
Dubai,
it
Dubai, Dubai.
So be it
Sorry.
hospitals, be it hotels, or a lot of other discretionary spending, real estate. So I would want to sort of suggest landmark cards. Here our target price is 920, so a decent amount of upside here. Now the
Yeah.
bigger picture is that we sell about 40 plus lakh cars, and the luxury market is only 1%, so about 47,000 in units. And whereas in developed markets, this is in double digits. So we have a long headroom for it to grow. Now, this company is a key OEM partner for PVs, especially Mercedes-Benz, then Jeep, Honda, Volkswagen, and Renault. And recently, they have added MG Motors as well. Now, our sense is that overall, since Mercedes is one of their key customers, they are slated to launch a number of models this year, and that should help them to sort of deliver overall double-digit kind of a top-line growth. And I think while the new car sales is 78% of their business, the after-sales service is a very lucrative business. It is a business which has got some 40% gross margins, 18% kind of EBITDA margins, and 20% kind of a ROS. So as and when we see a bigger pool of cars being sold, the overall revenues from after-sales service is going to sort of go up. And that should lead to sort of margin expansion for this company. So I think this is one company which is a good play on the overall premiumization of the auto market, and with good ROCs of 20%, yield of 7%, and which is why I feel that even with 22 times FY26 basis, the stock offers a decent or a good upside from current levels.
Absolutely. Actually, sir, Dubai I said because there is landmark builders and I think something on the real estate side in Dubai, UAE. तो ऐसा लगे आप देखते देखते सोचे रहोगे कि एक लैंडमार्क कार्स भी है इंडियन मार्केट में, सो देखते हैं कैसा है. And they have come out with that.
No,
That's the
that's not
joke.
the connection, bro.
I was just kidding, sir. Okay, so sir, that's it from our end for this edition. So thank you very much for joining us. See you next Friday. See you viewers next Friday. Thank you so much.
Pleasure. Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.